Hey everybody, Brian Kutu here with Fairway Mortgage at the Epic Mortgage Team. Today in the studio, I've got a good friend of mine here, Whitney Dutton with the Dutton Group at RE/MAX. We came in to talk, just a little bit about the markets and some really neat stuff that I see that you've been posting online. So how are you doing today?
Good, man. Thanks for having me today. Appreciate it.
Yeah, so one thing that I wanted to jump right into is it always seems like you've got the best listings. They come on the market, you've got these open houses, there's people out the door, got multiple offer situations. Dude, I'm telling you, there was one property that you listed that I had five pre-approved buyers that I have make an offer on the same property. Remember that?
I do, yeah.
So what is it that you do that separates you as a listing agent from your competition in your Fort Lauderdale single family housing marketplace that you seem to really dominate? What makes you the best at what you do?
Well, I appreciate you saying that. But a couple things. I'd be remiss to say that the market didn't have some responsibility of the action, the low inventory. I mean, the market produces a lot of what we do. So I will tell you that I operate in a price range that is demographically very popular.
Yep.
So the majority of what I do is kind of between that 500 to a million with some properties outliers there throughout the year. But the majority of the homes that you see are very popular for first, second home buyers.
Yep.
So I hit a very large demographic, right? So that has a lot to do with it. But number two, we try to aggressively market and aggressively, price these properties to create the most amount of action. And sellers trust us. When we go and talk to them and we explain how long we've been doing it, our experience levels, the results that we think we can achieve, I'm very fortunate to work with good sellers that trust what we say and a lot of times let us do what we want. And when the seller gives that up to you, we're able to really focus on the results. And I work with a lot of great sellers.
Yeah, no, it's very true, and everything you said is totally true. One thing that I want to notate is, I've known you for probably 5 or 6 years, and it's been really impressive to see your professional and personal growth over those 5 years to really being like one of the key agents in this Fort Lauderdale marketplace.
I appreciate that.
So that's really neat. Some of the other things that I see that you post that are that I find really intriguing personally, just being in the real estate industry, and then I noticed that you get a lot of engagement on this. Occasionally, you'll break out 7 key statistics, and you say that there's 7 key statistics that you look at every single week to determine if there's any sort of shift or any sort of movement in the market. What are you seeing right now over the last couple weeks about this real estate market here in Fort Lauderdale?
So I started doing that a few years ago, even before the pandemic, which we would focus on stats to kind of understand the trending, understand average day on market, understand, a lot of these key factors that go into pricing. And during the pandemic, when we had those month or two in our industry that were kind of, non-existent, I decided to just start making some videos about them and sharing them. I've always shared those stats with my sellers, and I've always shared those stats with our buyers, but I never shared them with the public.
Yeah.
So I just kind of took what we were doing, and I basically used those same stats we used to educate our sellers and our buyers to educate the public. And it seems to be pretty popular, and it seems that people like them, especially in a highly speculative market that we're in, where everybody has an opinion on, where's the correction, what's coming, are prices going to be affected, are there going to be foreclosures, is inventory going to increase? I mean, so I try to shed some light on that in with data, right? You can't create data, you can't make up data, the numbers are the numbers, so it at least provides some truth to cut through some of the speculation.
Yeah, I mean, I think you're spot on with the data points. Andrew Caden and I, my business partner at the Epic Mortgage Team, we started making this daily statistical market-driven post, and it's been getting tons and tons of engagement. People just want to see it. So, going back to you, what's going on right now? Like, tell me over the last couple of weeks, is there anything popping out on those 7 statistics that you look at? Maybe not all 7, but is there something that's like really popping out at you that you think that everybody that's watching this video today might want to hear about?
Yeah, so I think it was the email you reached out to me on a few weeks ago about one of the stats we were posting, and you and I have always talked about the stats after I throw them up and what they mean, and I also like to get lenders' perspective because they look at things like average pull-on credits and credit scores and mortgage applications. So we look at 7 stats. We look at the number of new homes coming to the market every week. We look at homes under contract and pending for the last week. We look at homes sold, back on market, total active, which is total inventory, average day on market, and then price reductions as well.
Okay.
So yes, the two that are really standing out that are actually showing some change in the linear graph would be the total amount of inventory and then the price reductions. The price reductions being the biggest indicator, but also the pending sales. So really we try to focus on the integers that can create or influence supply and demand because that's where basically the pricing comes from.
Right.
And those are the number one quotes that affect supply and demand. Yeah. So to give you an example, price reductions, right? This week we're averaging 42 price reductions over the last 7 days. In January it was 15. February it was 14. So we're seeing,
triple,
almost 3 times the amount of price reductions per week.
Yeah. What does that tell you though? I mean, I'm kind of like, I'm like a third grader. I'm not very smart.
Yeah.
What does that mean
so first
to the
you
real estate economy?
Yeah, so you want to take the price reductions and first see if it's affecting the inventory.
Okay.
So we'll look at like total inventory. If you look at like January, February, March, there was roughly at any time about 300 single-family homes in Fort Lauderdale for sale.
Okay.
We're at 426, 417 last week, 371 the month before. So their inventory is increasing. There's no doubt about it. So you look at price reductions, then you hit the inventory, and they are correlating.
Yep.
And then finally, you'll want to see what everyone wants to know is that affecting price? And in order to do that, you have to then check out demand. Are the number of closings the same? Are the number of pending sales the same? And right now they are. So it's a little bit, the relationship is not affecting price or demand right now, which could tell you 2 things. It could say that we have so much demand, right? That the inventory that we're seeing staying out there or these price reductions are coming from, we call them sellers that are selling because of greed, not need, right? So
that's awesome.
Greed,
not need.
Greed, not need. So if the seller's selling because their house is worth 6 and they think, hey, somebody will pay me 8 if I put it on. There were a few things that were happening like that in the last couple of years where, people were just paying these numbers that were a little crazy just for no reason. And we found that is cut down. So the price reductions, as I study what homes are getting reduced, they are the properties that have been on the market a while. They are the properties that have probably, been sitting. And agents, when a market gets very competitive and the amount of transactions per agent goes way down, if you're used to making X, you're making Y, sometimes you'll take a listing you maybe not should have, right? So if a seller says, hey, can you list my property for 8? We will say no to that, right? If it's worth
Your
4.
team says no to that.
We'll say no to that.
Absolutely.
So we try to not take a property that's overlisted because, you end up wasting time and money.
Yeah. One of the things that I'm seeing is there are still properties that when they're priced right and they're nicer properties, the updates are there.
Yep.
They don't need a whole lot of work.
Yeah.
They're still flying off the market like in days.
Yeah.
And they're going over ask. I think we talked about that the other day.
Yeah. Yeah, we put 2 properties on the market last week, both multiple offers, both over list price. So yes, it's still happening.
It's still happening.
Yeah.
I think where we're seeing, like you said, the reduction in price is coming from, obviously over, people are just overshooting what they think their property's worth. They're being greedy, like you said.
Yep.
But these properties that require a lot of work.
For sure.
Right? I think that people don't want to do work. And with inflation and supply chain issues, the cost of that work is more. So let's just take a pool, for example. To build a new pool that's nice might cost you, what, $100,000?
70 to 100 probably, yeah.
4 years ago, what would that
30 to 50?
30 to 50. So I think that means a lot, too. When you have a property that's updated, you're probably going to get more for it. But I think it's really key because our buyers are going to have a great opportunity. If they're willing to take their time on renovating a property, they will be able to get into a home where before they were competing against so much cash or
Yeah.
8, 10, 15 offers. I think that there's a lot of opportunity for both sellers and buyers, and the market's going to continue to stay strong.
There's no doubt that buyers have been getting abused, right? We all work with you, myself, a lot of these buyers that you honestly feel for because they need to be in a home. They want to be in a home, whether it be for outgrowing it due to kids, need to be closer to schools, all need to be closer to work, all these reasons, and they haven't been able to.
Right.
So you feel for them. You're putting in offer over offer and getting beat out. And I feel like there is some inventory now coming to the market.
Yep.
That if you can coach your buyer right, set the expectation of you may not be moving into this redone turnkey home. However, you can get into this less competitive market of a property that needs a little more work. Do what we did when we first bought our house, right? The sweat equity portion.
That's right. Create value.
Over time, right? So maybe redo that bathroom or kitchen in the next year or two. Maybe put in the floors, the windows, the roof in the next year or two. Take advantage of the FHA 203K loans, right?
The conventional Fannie Mae home style. It's an incredible product. The renovation products are really, really neat.
Yeah, if you have two homes that are relatively in the same neighborhood, one that doesn't need any work and one that needs work, all of the flies are going to be attracted to this piece of fruit. So this one sits out over here. And, you talk with the seller. If that seller does need to sell the property for one reason or another, talk to them, figure out what it is, and explain why the property should be worth X and make a value proposition. Because these FHA 203K loans, you can get them accepted if there's not competition.
Absolutely.
However, if you have 5 offers, they're going to use that FHA 203K loan, and it's going to be
thrown in the garbage can.
Yeah.
So, just to recap on that, market's strong. It is softening a little bit. It feels like just based off of key statistics.
Yeah, it's softening in a way of the right sellers are selling right now, and the sellers that don't really need to are sitting. So we need to see over the next quarter. Real estate stats are a lagging statistic to the economy, right? So we need to see if this is going to affect price over the next 2 quarters.
Yeah. Well, we're going to take we're going to keep an eye on that, and we'll have Whitney back to talk about that.
Yeah.
The last topic that I really wanted to discuss with you, Whitney, today was you've been in the news a little bit lately.
Yeah.
You've had some articles that you've been quoted in, and it's been all around insurance. And you're not an insurance agent, you're a real estate agent.
Yeah.
And you're getting write-ups about your thoughts and posts and whatnot surrounding insurance. What is that all about? Let's just kind of give me a general overview of what's on your mind in related.
Yeah, we've been lucky
insurance.
with that for sure. We've got a great PR team, that works with us. That's been helpful. But in reality, insurance has become such a big issue in these properties that we sell. So, if you take Victoria Park, Croissant Park, Sailboat Bend, you take them and you look at the year build of these homes. They're 1940s, 1950s, 1930s. They all have older roofs. They all have cast iron plumbing. They all have, can have the
cloth
wiring. And what's happening is that's the majority of my product. So we started seeing about the last 2 years, 3 years, we started seeing these cancellations, and we started seeing people that would purchase a home, get a quote, close, and within a year, the insurance companies are coming back out for quality control checks,
Cancel.
recertify, and say, oh, I'm sorry, you don't meet our guidelines anymore. We're either going to cancel and you have to pay this higher premium. Or now, in the last year, we've been seeing insurance companies literally going bankrupt, going insolvent, coming out of the market, forcing citizens to come in to place insurance for you, which is the insurer of last choice, as we know. And their premiums are 20-30% above. So what happens is when you go to give a debt to income, as you know, you have a quote that should be what insurance should be.
Yeah.
And that's how you can say you can safely afford this home. You close, within 2 years, all of a sudden, that insurance policy jumps up that wasn't factored into that debt to income. It can put people in a tricky spot. So I've been saying for years, or for the last couple of years, insurance is the one area that we need to watch to really have an impact on people's affordability with their homes. It's crazy.
Yeah, I mean,
the swings.
It really is. I mean, I think when I started back in this business, we were quoting people for an HO3 policy, $300,000 to $400,000 home, $2,500 a year.
Yep.
Now, when I'm pre-approving somebody, I'm using $5,000
minimum
so
5K.
double.
Yeah, for sure.
And it's a real problem. I would consider the insurance issues here in Florida and especially South Florida to be a crisis. not a problem.
Absolutely, yeah. It's bigger than interest rates. So if you look at your mortgage and you break it up into what you pay, there's one variable that can change, and there's the other ones cannot. So interest rates can't change, right?
Nope, 30-year fixed.
The term you borrowed on can't change. The price all that can't change. One thing that can change, and can change in any drastic input, is your insurance. Mm-hmm. It can go up $300 a month. It can go up $200 a month, $400 a month, and that's without ever having a named storm. So imagine if we get a named storm, what they can do to your insurance rates. So if you look at that affordability issue and where some issues for lending could come into play, it's you thought you signed up for a $2,000 to $3,000 a month mortgage, and now it's $4,000. And if you look at 2007, 8, 9, when variable interest rates changed people's mortgages from 4% to 12% or 8% to 16%. That's where a lot of these foreclosures came from. Was this an unaffordable, chance to, or let's say you're buying an investment property. Your rent's X, your mortgage is here. Now the insurance comes up and changes on you overnight.
Now you're operating at a loss.
Now you're operating at a loss every month. Can you keep that property? Can you afford to keep that property, right?
Yep.
The one thing is, at that point, you were purchasing in 2008, 9, 10 at 100% debt to income.
Absolutely.
Or LTV, right? But where now, at least there's a buffer zone with what you put down on it, which is good.
So that might create some inventory as
it
insurance.
Could, yeah. So insurance is my number one indicator I'm looking out for. I started to kind of speak about it, and it's been picked up by some really good people, and it deserves to be. So when we talk to our buyers, now we have to tell them, expect, I know it's 5. They could hit you at 7 next year.
For sure.
And people don't understand how is that possible, and it is. It's real.
It is, and it seems like the state of Florida has had some legislation that's been going into place lately to protect buyers and also to protect the insurance companies. I think one key thing that people forget is the insurance companies aren't all to blame here. I mean, you have homeowners who have made fraudulent claims for water damage where maybe there's a water spot underneath the sink, but then they get their floors, their kitchen, everything redone, $150,000 claim because of these claims adjusters come in, and really all that needed to be done was they needed to cut out some wood, put some wood underneath the sink. No one goes underneath their sink to hang out anyways. So the insurance companies aren't all to blame, but the whole system is broken, and hopefully that those who are much smarter than I am can find a solution.
Yeah, it's easy to blame the insurance company, but it's one of the most litigious environments you're going to find, and there are more lawsuits for water damage in South Florida than the whole country combined, almost by like 3 times. It's crazy.
It's insane.
There's this, and I can get into this deeper on a session when we just talk about insurance, but there's this piece of old legislation, right, back from 100 years ago that talks about if you go to file a claim for a roof, it's $20,000, and your insurance company says, nah, we looked at it, it's $15,000. If you go to an adjuster, appeal, and try to go to court over the dispute of the difference in claims, if you have $1 over what the insurance company gave you, the insurance company is required to pay all the attorney's fees on both sides. They're required to pay the claim, etc. And what that does is that breeds all this litigation from all these law firms that are basically going out there and sending mass lawsuits out because they know the insurance companies don't want to take them to court. They'll just write checks. They settle. It's
more expensive to go fight their battle,
So they settle, and then that's caused a trickle-down effect to the contractors who are now hip to this. And the contractors now, they do an assignment of benefit clause to where they'll come to Mr. Kutu and they'll say, hey, look, the roof, etc., it needs fixed. I tell you what, you don't pay anything. Let us take the assignment of benefits over. Let us handle it all for you. We'll go and file it with your insurance company. Well, that $20,000 claim that you're expecting, they might be sending a bill to the insurance company for $30,000, $40,000. And the insurance company knows they're not going to go to battle over court over this, so they'll just write the claim off and they'll send the check.
So consumer gets free roof, contractor gets their remaining.
The margin, they put a spread on it, absolutely. And sometimes the consumer has no clue that's difference. They just think that, hey, this guy's working for me and they're going to take it and they deserve. When in reality, the consumer at the end of the day always gets punished. So we get punished in higher rates for our property insurance.
Yeah, for sure. It's absolutely insane. We'll keep an eye on that, and we're going to also report back on that. I hope to have Whitney back on a monthly basis because he brings so much value to our marketplace. And I just feel like you have so much good stuff to share. We'll continue to share the stats, and we'll watch the market and see where it's going. Let's close out on this real quick. What do you think we're going to see in the next 6 months as it relates to like values, home values? Because I get this question every single day. Yeah, I mean, and it's just an opinion. I have my opinion too, but I'm going to let you share yours. Here's the question I get. Here's what buyers tell me every day. I go to call them to get them pre-approved, and they say, "Man, I'm going to wait till this the market cools down." Or,
sure.
I'm gonna wait until we see the crash. And what do you say to that? I know what I say, but what do you say to that? Give me just a little a bit of something to share with the consumer that talks about
so
the crash.
when we do a buyer consultation and we come and sit down, they ask about that, right? Is now the right time to buy? My number one question is, how long do you plan on staying in this home? If it's a short-term process, then we'll talk about the risks that are involved with a short-term purchase, right?
Sure.
If it's a long-term, like, hey, no, I'm going to be in here the next 12, 15 years, then we explain to them the difference in how real estate values can change, and chances are you're going to be great no matter what happens in the short term. But as far as where will values be in 6 months, it's going to be tough to say. I think we're pretty steady. And the reason why, there's so many people holding cash. There's more cash right now out there in checking and savings accounts than there ever has been before. There's more equity in homes than there ever has been before. So let's imagine that values change 40% overnight. How can that be sustainable? Because I'll have 3,000 people calling me to purchase these properties. So the inventory to supply and demand really can't change drastically like that.
Yeah.
We'll see slow reductions as these properties get picked off. I think there will be more opportunity in some of these homes that need fixed up, like you said. I think there's great opportunity there. But on a home that's in a great neighborhood, nicely remodeled, in a great price range, I don't think we're going to see a change.
Yeah. You touched on one thing. I'm going to shut us out with this. We have a generational issue from a housing perspective, right?
Okay.
So the average age of a first-time buyer in our country is 33 years old. Okay. Over the next 5 years, there's more people turning 33 than ever before, other than the baby boomers back in the 70s in our country. Behind them is the generation behind the millennials is even bigger than the millennials. Okay? So there's going to be so much demand for housing just from a generational perspective, and there's no supply.
Yeah.
So it's just pure economics. You know, I don't think that we'll see these huge swings that we saw over the last couple of years, these 20% appreciation caps.
Yep.
But do you think we'll just get into a more normal market, normal appreciation moving forward?
You know, I hope so. There's nothing worse than seeing buyers stressed, can't afford, number one, or just could afford and can't actually get into place to purchase. It is a very stressful situation, as you know. If you're not working with an expert, it can be that much more stress added to the situation. So I think we need the buyers to get a little bit of a win. You know, it'll kind of level the playing field a little bit, and I see it coming. How big and how much? I think you're still going to have to be aggressive. Yep. As a buyer, you will still always have to be aggressive. But let's get rid of the no inspections, and let's get rid of the risk that you put yourself in right now to get a property approved. You're throwing no inspections, no appraisals. It's high risk stuff. So I'd like to see some of that come off the table.
Yeah, sounds good. Dude, thank you so much.
Yeah, you're welcome, man. I appreciate it.
I'm glad you came in. Hey, everybody, Whitney's information is on the screen below. Feel free to reach out to him. Amazing real estate professional.
Appreciate it.
If you have any financing questions at all, if you have any follow-up questions regards to anything we talked about today, feel free to reach out to both of us. We appreciate your time, and
thank you
we'll
so
see you in
much.
about a month.
I will tell you that we trust Fairway, through and through. So, everybody we do try to send them that way. The benefit of working with a great lender in the real estate process from start to finish is unbelievably important. So, we appreciate what you guys do here as well.
Appreciate it, man. Thank you so much for the kind words. All right, everybody, thanks so much. We will see you next time on our next real estate conversation. Have a good weekend.
Thanks.